Let's also go across and welcome on board Rajesh Palviya, Head Technical and Derivative Research at Axis Securities. Hi Rajesh, good morning, and not a great morning looking in for the markets. GIFT Nifty for now is indicating a gap down start, and other than that, Rajesh, what's in the commodity basket? We are seeing the crude is also cooling off. So first question to you is your take on the OMCs basket, because just yesterday what we saw is that stocks like BPCL, HPCL, they were seen to be gaining anywhere between 3 to 4%. So help us understand that technically, how are you seeing these counters?
Good morning, Srishti. Good morning, everyone. So looking at the OMC basket, most of the stocks like BPCL, HPCL are now negotiating with its, near-term resistance area. I think any move of another, 1 to 2% from current level would trigger a breakout on the near-term chart, and then we may see furthermore, upward momentum in most of the OMC stock like HPCL, BPCL. Both are looking very attractive. If we describe the technical setup of HPCL, almost it's on a verge of giving breakout at 372. If this happens in today's session, then I think this rally can extend to 385 to 390 zone also. So at this juncture, I think those who are already long in trade can hold the position with stop loss of 360. For BPCL also, the same kind of structure. The immediate resistance is placed at around 289. If it crosses these level, I think here also we may see traction towards a 300 kind of zone. So here also one can hold the position as the stock is comfortably holding above 100-day moving average. So your stop loss should be placed at around 278 to hold the long position.
Okay, those are some technical ideas coming in. But Amnish, wanted your own sense. You think perhaps a safe space could be some of the crude sensitives? The fact that crude has seen such a big slip, maybe some of the paint companies, not as much tire perhaps, but OMCs, that looks like an obvious place?
See, they are actually mainly the crude plays. For example, you look at, say, paint company, as such, the sector is under a cloud. But if the crude prices remain lower, then definitely there's a scope to, you can say, expand the margin. So these are, I would say, purely a trade at this point of time. Now, when it comes to your oil marketing companies, I think the way oil is slipping and the way oil has behaved over the last 15, 20 years, whenever any such event happens, so oil usually takes a big tumble, and I don't rule out that if the current uncertainty continues, oil might even go below $50. So in that sort of a scenario, although I expect government to again come forward, increase the excise duties, and may also pass on some of the benefit to the consumers, but at the end of the day, oil marketing companies still might end up making more money than what they have been making in the past, and this could be providing at least a near-term trade. As far as these two segments are concerned, I think in addition to it, you can say aviation sector is one which could benefit, and I think all the crude sensitive segments, whether it is, you can say, going into the pipes, whether these are going into some of the packaging and, you can say, consumer, and also there could be, you can say, gains here and there, purely directionally because of the timing differences between the purchase and usage of the inventory. So some gains could come for some of the companies which could be reflected in the stock prices in the near term.
So that's the takes on some of the crude sensitive counters. But sticking with the theme, and lastly, if I can have your take, Kunal, on Gujarat gas, because that's counter is in focus. Because today Motilal Oswal has come out with a note on this one with a buy rating, target price of 475 rupees. What they're highlighting is that yes, of course, the company will be a beneficiary of the slide in the crude oil prices, and other than that, they also believe that the valuation de-rating is largely oval. But technically, Kunal, how are you looking at Gujarat Gas?
So it's an okay chart, Srishti, because the stock over the last 6 months, I think has corrected from 700 levels to almost 400 or sub 400 levels, which the stock found support just about a week or two back. Now it's just trying to go into a time-wise consolidation around the 400 level. So the risk reward at 400 mark could be a lot more attractive. Given the fact that the stock has already corrected more than 30% approximately from its previous major swing highs, and even on the monthly charts. But the only concern with stocks like Gujarat Gas, and if I can probably club the other two names, IGL, MGL, etc., that these stocks, the trends for these stocks are a lot more fickle, because when you see these stocks going to any kind of a breakout, immediately post that breakout signal, these stocks, they tend to reverse and get back to a corrective phases. And same happens when these stocks give confirmation of breakdowns. So which means that largely these stocks are more range bound. Yes, you can look at more short-term trading opportunities, but nothing major decisive as in terms of trends which could be established into these stocks.
That's on Gujarat gas right now in trade. Just want to look at some of the other names which are going to be in focus. And like we were flagging off earlier as well, some of the other stocks which are going to be in focus. Of course, there's been a slip that one has seen in the WTI crude prices, the fact that it slipped sub the $60 per barrel mark. So look out for some of the crude sensitives, largely the OMC trade, some of the paint companies, Interglobe Aviation, SpiceJet. These tend to be sentiment positive. Also, sources are telling, the ET reported this morning that when it comes to Vedanta, they're looking at considering trimming demerger into 4 units after a corporate tribunal blocked the spin-off of their power business. So that's the other stock which is going to be in focus. The update from Phoenix Mills for the 4th quarter is strong. The consumption across malls has seen an uptick of 15% on a year-on-year basis. This Cochin Shipyard, they've signed an MOU with Dry Docks World. They're going to be enabling development of ship repair clusters to synergize mutual strengths. Well. So that's going to be the other stock which is going to be in focus. But Kunal, first let's also look at the charts of Interglobe Aviation. And we've been often talking about as to how strong and resilient this one stock has been, at least in the recent bout ever since the US correction and volatility trickled in. Could we get a dip at all, or do you think it's going to be a one-way move up now that crude is acting as such a big tailwind for Interglobe?
I think it should dip. There are phases where even strongest sector which have the best data points for themselves, they would probably get into an odd corrective phase, and I think that's what determines the strength and the confidence from bulls. So that keeps on getting tested, even in the best of the market times, and especially in these market times, you're bound to get back into zones where these stocks would correct. But I would agree largely that these stocks are the ones which have done reasonably well. They've managed to stand tall in the toughest of the market conditions, especially in the last 6-8 months. So you can probably expect that there would be a very stronger degree of outperformance which could still be there into these names. So if in case the stock provides any kind of a dip or as a falling opportunity, that should be taken with both hands and trying to accumulate from a long-term play.
How much do you think that dip could be? Considering in the last, if we can just bring up the 1-month chart, it's been almost a 10% notch up or so.
Yeah, so, from 4,000 levels, if I'm not wrong, the move started for Interglobe just about a month or two back. February low was I think around 4,000, 4,100. And in that zone where the stock moved up higher, there have been 5% to 7% swing lows for the stock. So which means that even if you look at a very, say, minor correction into the stock, we could be looking at, say, a retest of 5,000 mark from current levels.
All right, so let's watch out for that. A retest of 5,000 could be on cards when it comes to Interglobe Aviation. Well, of course, just yesterday, the stock did end the day at its highest point itself. But another stock that moved very strongly yesterday was Geo Financial Services, because the stock was the top gainer in Nifty 50 and surprisingly a 5% jump coming in on this one. But Kunal, help us understand that what are you looking at when it comes to Geo Financials on the technical front? Why I ask so, because just in the last 2 days, what a move coming in on this one. Anything on the volume front or on the trading volume, the kind of setup that it is looking at that is worth highlighting?
So nothing exciting, frankly, for Geo Finance.
Okay.
The stock was on the verge of a breakout just about a couple of weeks back, when the pre 2nd April period, where the stock was inching towards a big breakout of 235 odd mark. But that did not happen for Geo Finance, and the stock fizzled from those levels. Now, even after yesterday's up move for the stock price, we've not seen any major jump in terms of the net volume, the change in the open interest trends for Geo Finance. So I think that would probably make the stock a bit more range bound. Yes, on the longer term charts, 200 is a major support. The stock has retested and bounced off from that 200 zone twice, but then 235 remains to be a major resistance point.
Here's Prashant Jain then telling us about what he makes of the uptick in power demand as the income rises and prefers a very bottom-up approach when it comes to this sector.
So as incomes grow, power demand in India should continue to grow. Now the key is how are you, so growth outlook is fairly steady. It is moderate, but it is fairly steady. It is de-risked. But the key is what are you paying for that? So there I think the variation in valuations across utilities is quite high. So I think it is mainly a bottom-up approach that one will have to adopt in this sector. So I think these stocks again, to my mind, are reasonably valued and one should expect uh, close to market or maybe slightly ahead returns, but it would be more stock specific.
All right. So expect stock-specific returns in the power space. That's the call coming in from Pashran Jain. But the consensus theme right now, Avnish, is on the street is the focus should be on the domestic-oriented companies and sectors, of course. Help us understand that. What is your take on that? And within that, which are the sectors that you are preferring at this point in time?
You see, on this, I think we are also of the view that I think at least in the near to medium term, all the domestic-oriented sectors, they will be relatively insulated from what is happening on the global front. Now, if you look at particularly in that pack, then you can look at say some of the consumption names which are there, both your staples as well as discretionary, which definitely give you a very clear trade. Some of the auto companies, although the run up there might not be that significant, some of the leading private sector banks. So this is you can say the third segment which you can look at. In addition to it, other spaces, for example, you can look at say hospital, which is absolutely you can say insulated, pure play domestic. And then of course there are domestic pharma companies which are more on the formulation side. And I think another important thing which you can look for in this is some of the plays when it comes to you can say some of these infra companies. You will get some of these defense plays which will be purely you can say based on you can say the local demand. And I think the entire defense cap good space also will be having you can say some companies for sure which are completely you can say dependent on the domestic demand, and they have nothing to do with with what is happening on the global side. So I think these are some of the you can say segments which I can recall at this point of time in which one can. These could be actually basically the hiding spaces during these volatile times.
The interesting bit for me would be that, Amnish, when markets say that commodity prices are down and this company would benefit. I mean, one side is okay, demand is down. But if you're a wire company, if you're a car company, if you're a paint company, if you're a textile company, crude is down, copper is down, coal is down. When will markets start thinking like this?
Because the only thing is that what you're saying is absolutely right. When your raw materials get cheaper, there's a tailwind in margin which can come. But I think the bigger issue here seems to be that what could be the impact on the overall economy as far as India is concerned. So, for example, we have a large pool of middle class which has been created by IT services, GCC. That is you can say one segment, and then your entire industry, which is you can say more manpower intensive industries like, for example, your jewelry, diamond, etc. So there are pockets which create a lot of employment in India where there is now much more uncertainty than what it was in the past. Now, if there is any hit in the employment generation or to those industries, then some of those gains which might actually accrue to some of the companies where the raw materials are getting cheaper. So some of those gains might get neutralized. So that is why, yes, one should start looking at you can say, the softening raw material scenario. But then again, it will be a very, very company-specific kind of a call, because if the situation prolongs for, say, another 3 to 6 months, or if the situation, you can say, remains like what it is, it adds to uncertainty, and eventually it is going to impact our growth rate also. At this point of time, maybe very difficult to say whether it is 25 pips on GDP or 50 pips on GDP. But whatever impact comes, I think it has got the potential to, if not in a major way, at least give some jitters to the recovery which we were expecting on.
Kunal, what is the trade ahead of and after MPC, Bank Nifty?
Exit longs after MPC.
Okay. But don't
Exit
keep
longs in
long.
the sense trim long positions.
So basically don't have long positions.
Yeah. So, Nikunj, we are at a point. So, see, tomorrow is a trading holiday. Monday is a trading holiday. And
Monday
that there's so much of...
Monday's also chutti.
Yeah.
Yes.
Why didn't I realize?
Next Friday also, I guess. The
Yeah,
Good
next
Friday.
week. Yeah.
18th.
So next week.
Sorry, I have
So
the
we
calendar
are
ready.
we are at a point where there's so much of news flow, and with these sudden breaks in between, there's bound to be an increased spot of volatility. So, and we've seen that historically, that when the VIX moves up about 35 plus mark, we've seen that the volatility doesn't settle off immediately. It takes weeks for the VIX to settle down. So I think we are at a point where it's always very prudent to try and trim down the long positions if in case the market gets into favor, your stocks come back to your cost prices, etc. I think that's a strategy which I would advise.
Amnish, what is the sense from mutual funds? I mean, it's brave that they are buying, but how long can they buy?
You see, it all depends on how the flows are. Say, for example, the SIP inflows, they have been sustaining the markets, but now there is some softening definitely on that front. But the bigger thing is that our markets are down, not because the mutual funds are not buying, because the FIs have been selling vigorously from the past many months. But I think in this kind of an uncertainty, definitely I foresee some money movement, which is you can say which will happen towards some of those defensive, more domestic oriented sectors. But yes, the fear there could be that if this kind of carnage in the market continues, then the inflows to the mutual funds may take a hit. So I think that would be the biggest point to watch out for.
What about keeping long positions in this market? I mean, as a principle, should one not have long positions because technically it could get very bad before it gets better? Rajesh?
In this kind of volatile market, yes, traders are, getting a hit of stop loss on the both sides. So it's very difficult to trade in this kind of volatile market. But yes, those who are looking this market to accumulate good quality stocks for long-term perspective, it's again opportunity because a lot of stocks are getting hit because of volatility. So I think they will get a good price point in this volatile market. But for trader, it's very difficult. Uh, because there is a divergence. Nifty is in bearish mode and Bank Nifty is in bullish mode. So again, it's very difficult to take call in this kind of market in which direction one needs to trade. So I think one should be very light in terms of positioning even for a trading point of view also.
$45 points down for the Sensex, 431 points down for the Nifty. We are in for... It's not looking that bad, Kunal. Pre-open पर छोड़ देते हैं.
I think 100-200 points is the gap down which I would expect for the index. 225 was the gift Nifty. So I'm expecting say 150-200 could be the trade for the...
Where was Monday's low, Kunal? I mean, if one has to say that all the Monday gains have to get erased, how much will have to add? Another 200 points, right?
Yeah, I think 21,700 was the low, 21,743.
And do you see that remaining intact for a long time?
For now, it should remain intact. But what happened, Nikunj, was that there was a 700 point gap which was created on Monday. So we were at 22,900, we closed at 22,200. There was the 700 point gap. Yesterday we filled 3/4 of that gap. Such kind of gaps, and I've looked at historical charts, they don't get filled completely in a matter of 1 or 2 days. There are processes which takes weeks for the gaps to be filled completely, and in that process of the the gap being filled completely, there is increased amount of volatility which could happen. But interestingly, the index generally doesn't retest the previous lows in this kind of a scenario. So what my expectation is that we should be hanging around that 22,000 mark, say plus minus 200-300 points. That's what is my best expectation for the index.
All right, so 200 points lower in the pre-open rates. We'll let those rates settle in for a bit. But Amnish would like to thank you for taking the time out and speaking with us this morning.
Thank you.
But with this, viewers, let's also get you some of the mid-cap ideas from both of our experts then. And Kunal, you go first. Tell us within the mid-cap basket, which is the stock that you are eyeing this morning?
See, I'll again pick up a differentiated name, a stock which has been a lot more resilient. Indus Star over the last 2 to 3 months, the stock has been very strong, trading now very close towards its 200-day moving average breakout, and as well as a range breakout. So we'll look out for targets in the range of 385. Stop loss could be kept at 362.
Let's watch out for Indus Star's telecom as a space is definitely one of the preferred sectors being domestically focused. Let's watch out for that. But Rajesh, help us with your mid-cap bet today.
So two stock idea. One is GMR Airport, very strong buying action since last couple of weeks. Stock managed to give a crossover of 20-day moving average upward to the 50-day moving average. Long built up was there in data. So I think GMR Airport can extend its gain. 92 is the near term target. One can buy with stop loss of 82. And another stock is Coromandel International. Very strong setup across all time frame. Stock is holding above all its long-term, short-term moving averages, almost trading near to all-time high trajectory. We believe that Coromandel can extend its gain. Possible target 2110 with stop loss of 2030.
All right, so let's watch out for both of those counters. Two buy calls coming in from our experts. It's not looking that bad for the Indian markets, at least in the pre-open rates. Almost a 90 points of cut is what we are witnessing. Stocks like M&M, Shriram Finance, Eicher Motors, those are the stocks that we will be watching out for. But of course, all eyes will be on TCS as well, as that counter is all set to announce its Q4 numbers coming tomorrow. But what to expect from IT major? Let's revisit Nikund's take on the same. Listen in.
The timing of TCS numbers is such that there is going to be hardly any large clarity which they would come out with. Why? Because A, they don't give a forward guidance. B, markets know that on one side there is AI which is affecting them, and on the other side there is going to be tariff uncertainty. So it's the worst kind of a scenario for any IT company to come and talk about what the way forward is. So I don't expect any fireworks, because whatever numbers they would be providing, those numbers do not hold true because of the tariff impact which will start coming in coming quarters. So for a sector where struggle has been there because of structural factors, now the challenge really would be the future business, how it will get affected, and it will get affected. I mean, do they see growth in FY25? Do they see a flat, base in FY25? Having said that, the stock has corrected. So, if they are able to convince the market that order cancellations are not happening, deal cancellations are not happening, then maybe the fall or the stock drop is not going to be there. Half a percent, it's not looking bad at all. Kunal, if I say the phrase, सावधान रहो मगर पैनिक मत करो. Make sense?
Yeah. Very, very valid.
सावधान रहो मगर
You have
पैनिक
to
मत
stay
करो.
alert. Yeah. You have to stay alert.
But don't panic.
Yeah, not to panic, of course, because luckily for us, the last 6 months we've already seen a major gain.
Exactly, Kunal. Nobody listens to me when I say that. So let's say it again. सावधान रहो मगर पैनिक मत करो. That's for India.
Correct.
Panic China में हो रहा है, होने दो. All right, guys, be careful. Don't panic. Rajesh, can I say the same? Would you agree with me?
Yeah, definitely. It's not time to panic. Whatever damage has been there, it's already in price. So, Abhi, it's not time to panic because maybe it may take some time to settle down this volatility. But yes, sooner or later we will again move back to the upward trajectory. And I think one should not sell in the panic in these kind of volatile market.
I was reading in Times of India this morning, and which is said, I am SIP, and it says, I will not panic, I will not go easy on I will not cancel my commitment. It is easy to fear, it is easy to quit, it is difficult to stay on course, but if you stay with me, I will make you reach your wealth goals. So that's my limited point, guys. I mean, markets go up and down, okay, let me put it this way. In last 30 years, what I've seen? I've seen 9/11, I've seen 2008, I've seen taper tantrum, I've seen COVID. But the Sensex has gone from 4,000 to 75,000. And all these events are very binary in nature. When Ukraine war happened, everyone said, oh my God, this is beginning of a new regime. Cold war वापस होने वाला है. What has happened? So what looks like panic right now, it shall also pass. Of course, it will come at a cost of migration. When a reboot happens in the world, for example, when COVID happened, Atmanirbhar Bharat came. When China Plus One happened, things started moving here. When COVID happened, work from home happened. It almost appeared that work from home would be normal. People only go, offices will become graveyards, and bedrooms will become, your offices.
Yeah.
Offices have started, and bedrooms remain bedrooms only. So what there is something called recency bias, which we all talk about. Recency bias is that you look at the past and you say that, okay, what has happened in the past will happen in the future. And I'm simply speaking my experience, guys. I mean, this is an engineered fall. An engineered fall is something which can be compromised. COVID is something which was a natural pandemic which you did not control. You did not want it. It just happened. 2008 was about AIG, Lehman Brothers. I mean, imagine the great institutes of America, they went belly up. So the panic is reminiscent of 2008 and 2020, and the situation is not that. So in India, be careful. When I say careful, don't have dangerously high positions. Kunal made a great point that there is a holiday tomorrow, there is a holiday on Monday. So why do you want to take intraday positions? If you take a lot of intraday positions, overnight positions, there is volatility. 2000 point in Dow is not easy. I mean, if you are long, you are losing money. You are short, you are losing money. But Kunal must have gone short and then must have bought long, right? Kunal, you know it, right? You must have gone short in the morning and bought.
I was actually waiting since last 2-3 days that why it's not coming on me.
I was not sure. I was not sure. But now that I know that you've done it, tell us, how did you do it?
I was actually sleeping in the evening yesterday, so I did
Position
not see the Dow.
जब इंसान जब सोता है जब पता होता है जो होने वाला है दुनिया में. You know, Mansi asked me in studio that आप बड़ी एनर्जी लेवल्स हैं आपकी, 4 बज गए दिन के, आपकी गुड मॉर्निंग खत्म नहीं हो रही है. मैंने बोला गुड नाइट ही नहीं हुई थी, 3 बजे से उठे पे ट्रम्प के टैब्स देखने. Okay, what do we have on the screen? 1 minute left. And guys, I'll say it again. I mean, panic, it's too late to panic now. Just too late to panic. Be careful. Don't unnecessarily wander here and there. You know, there are some sectors which will be in trouble. Which is IT, pharma. I mean, I'm surprised to even imagine that why tariffs on pharma are going to come. It's going to hurt the US consumer the most. You know, I can substitute a sneaker, I can substitute a electronic, I can substitute a lot of things which are getting made in Vietnam, Bangladesh, India, China. But medicine cannot be substituted. If medicine costs they go higher, US healthcare will have to pay more. And the whole proposition of the Republican administration is that they will bring costs down. So it's beyond me to understand what is happening. But a lot of things are beyond imagination for a lot of us. I'll let the clock do all the talking. It does not look like a nasty start. And if we get away with like a 100-point nick here or there, maybe little bit on the Nifty, I think that's a victory for the bulls.